And I always think it's too hard for normal people to be party, because a lot of people are doing technical analysis, technical trading these days with the crypto or stocks, futures, commodities, whatever. And they always say that foreign exchange is the hardest one because they are full of institutions with a lot of good teams and a lot of AIs, whereas in crypto there are just a bunch of DJs, and then all you have to do is be smarter than the 50%, and then you can win some money. But the foreign exchange is just, you are the bottom. Like if we are going to join the foreign exchange, a technical analysis, we are at the bottom of the pyramid.
Of the food chain, of course. So let's say the following. It can be said as a fact, the more efficient a market is, the more difficult it is to make profits out of that market. Yeah. Now, a market is, when is a market efficient? The more transactions happen on a market space, the better the price discovery is, right? Yeah. So imagine if something never trades once a year, that's it. It's highly likely that that price was wrong, right? But if it continuously trades, then the price is as efficient as it gets.
Oh yeah, it smooths
out. Foreign exchange being the most transacted market in the world, has the most efficient price discovery mechanism. And making money in the euro dollar, if like people are listening here, right? Like I've been doing this for 15 years. Making money in the euro dollar, I strongly disadvise trying to do it. Yeah, because you will only lose money. You will not make money on the euro dollar trying to do technical analysis, forecast, whatsoever. It's something which many people have tried and more have failed. Yeah, I would strongly disadvise doing
because there is, as it's the biggest market, there is, so it's supposed to be the fairest of the prices, and also there's like bots, high-speed traders and stuff like that can just front run you.
Correct.
Okay.
So, I mean, first of all, you don't have any informational advantage, rather an informational disadvantage compared to the big institution and the banks. So you start with an information disadvantage. Then you have a technological disadvantage because you don't have the tools with the speed which institutions have. So what leaves you to believe that you have a better, that you have an edge to that market, right? Now, there are certain people who are called macro traders who take they don't take a view for the next hour, right? Macro traders take a view maybe for the next 3 to 12 months. Yeah. And they say, okay, I have a strong feeling that inflation is going to come down and this and that. Now, by doing this kind of analysis, macro trading, you can try to make some money. But there you are competing with hedge fund managers of the likes, Miller, Soros, these kind of people, Paul Tudor Jones. And these guys are also quite smart, they're doing this since 30 years. That doesn't mean you do it, but you are competing against Michael Jordan, So you better practice.
That's a very good example on that. I like it.
Yeah.
And like the foreign exchange market came to life in the 70s. Yeah.
So it's kind of a new market in a sense.
Yeah, because like we had World War II, then there was like domination. Before World War II, there was like British pounds being a little bit of the dominant currency.
Yeah.
Until World War I. Then definitely between World War I and II, it was a bit of a fight between the pound and the dollar. But after World War II, the dollar took over. Yeah. So the monetary system changed, and they did the following. They fixed the dollar price to gold. Yeah.
Yeah, the Bretton Woods.
Exactly. So that didn't move, yeah. And then they fixed all the other exchange rates to the dollar.
Yeah.
Basically, it was like everything was in complete like harmony. It was not moving, yeah.
Yeah.
And then in the 70s, it was like Bretton Woods when it came down. What happened? So the dollar,
Roosevelt took over.
Yeah, so central banks, what they do? They continue printing money, right? So you had so much gold initially and so much dollars. And now, you know, you print money, you print money, you print money. All of a sudden, you have money more dollars than gold.
Yeah.
And so there was high pressure on this peg.
Yeah.
The life. And then they decided to take it off. Yeah. And then things started moving. So the dollar depegged.
The roaring 30s.
Yeah. So the dollar depegged against gold and all the other currencies as well.
Gotcha.
And then we have that new regime where things move freely.
Yep. So it seems kind of a no-brainer, but I ask this question to everyone. So how does distributed ledger technologies impact your line of work? Like,
Sure. Okay, so that's not the question why we are doing it, right? So how does it actually impact us?
Yeah, like how does it impact you, and what made you also change? Because like I assume you've survived swimming with the sharks for so long that you were good because it's hyper competitive. So what prompted that change?
Okay, so I try to find like an analogy which is good. So the system, the monetary system and securities system, how we know it before the blockchain technology introduction, is feudalistic and medieval. There's always
so good. It warms my heart that you say that. Thank you.
So there's always like a prince, there's always like a guy at the border who wants a little bit of it, who wants to decide, who owns part of what you're doing. They have their hands into it. Whereas, of course, like the blockchain is a freedom, if you want so, right, for the monetary system. And it's not based on, like the US is a wonderful democracy, and we can we can argue about this if it's the case or not. But it stays the way that the democracy gives the power to the government to implement their laws, right? And it is necessary to keep the system alive. If someone is not conform with it, he still has to obey to this democratic rulership. In the blockchain system, it doesn't work like that. It's democratic and full stop. If you don't want to participate, you don't participate, and bye-bye, right? No harm done, right? Whereas in the traditional system, you are bound to the 50% plus people. And the freedom of the possibility to implement things in a more creative, quicker, and without this feudalistic system is not given in the traditional system.
Okay. And it's just something popped is crypto markets are fairly inefficient today. And it must have been quite a shock for you coming from the most efficient market into the really not efficient market. How did you adjust?
So I would say like cryptocurrency now, it depends on if you count by people or by volume. I would say like 50% is extremely sophisticated volume. And 50% is YOLO people who have very little idea, right? I mean, I don't want to, nothing against you. I'm also YOLO. Nothing against being YOLO, but like people who, you know, like cab drivers who say like, I also need to buy Dogecoin, you know? Like, that's not very sophisticated approach of. It is a very different, you know, that's why I find the 70s, so the break of the Bretton Woods, dollar gold, created a lot of tumultus in the foreign exchange markets. A market needed to be established. And it's like an earthquake, you know, like you have at the beginning, you have very disorderly waves before it finds an equilibrium. And we are there in cryptocurrencies. So this means.
So we're in the wave?
We are
equilibrium
surge, you know? Equilibrium surge means, you know, more market participants, more volumes, more regulation, more infrastructure, and then slowly, you know, it will start stabilize. But we are not there yet, because let's look at Bitcoin to take the most prominent one. It's now the 4th or 5th time we are having an almost 80% peak to trough drawdown. So one would think that the stability of the Bitcoin price in 2022, so more than 10 years after its creation, would be higher than it was in 2014. But obviously it's not. We are experiencing similar volatility and drawdown levels since like the beginning of time in Bitcoin. Now, this means that the process is still like in its infancy, which makes sense, you know? It's now a market which is, you know, approaching 600, 700 billion dollars in market cap, which is nothing, you know? Like it's literally nothing. It sounds like a big number, right? But the Apple, the stock of Apple, is 5 times bigger than the whole cryptocurrency. And what does it mean? You know, like, that means cryptocurrency is totally irrelevant for the financial industry in 2022.
It's a drop of water in an ocean.
Okay, so just I don't want to like I don't want to be with numbers, because sometimes, you know, like you throw around numbers and then people get disoriented, right? But the world economy is a more or less $100 trillion of GDP per year. 100 trillion. The wealth in the world, is 100 trillion equity, 100 trillion bonds. Okay, so the world wealth is 300 trillion. Bitcoin and all the other cryptocurrencies are 0.6 trillion. So the relationship of crypto to world wealth is 0.2%. It's very small. And we need more engagement from institutionals. We need more infrastructure to get this market bigger and more stable.
Channing, do you have questions?
Yeah, that was very sophisticated, the way you explained, and I was surprised that, you know, when we think about Bitcoin's getting more and more market cap, you know, in relation to as the time goes by, and then the Bitcoin price has become, you know, $60,000 or $20,000 per Bitcoin, we would imagine that it is becoming more stable. But it is still not. And I think this connects to the point that you have mentioned just at the beginning of the video. You said because the market is very about the US and Euro market is very fair, it's very efficient. That's why you can't make money. But then does it mean that Bitcoin is not efficient and therefore we can make a fortune out of it?
Well, the short answer is yes, right? The short answer is yes, but like how, that's difficult, like in the sense of we can make money out of this market, and this is a forward-looking statement, all right?
Yeah.
And as all forward-looking statements, I don't have the crystal ball. Things can always change. But inefficient markets give you the possibility to exploit it. Yeah.
Yeah.
And exploiting these is not by opening an account on a brokerage platform and doing a 10x trade and hoping that it goes into your direction. That's not the way you exploit these things. Yeah. And because you saw somebody drawing an astrology picture where there is like a line and then they say like it breaks up and then it goes, like that's very astrological. But there are strategies which are coming from academia, and this sounds more complicated than what it is. But there are strategies which are called risk premia strategies.
Okay.
And the word means that you're getting paid a premium for the risk that you take. Yeah, so it's like being an insurance company, right? When you insure your car, the company is taking a premium for the risk which they're taking. So that's a risk premium business, the insurance business. So you can risk premium strategies in the cryptocurrency space, and you can extract value from them. But you need a thorough process to do so. It's not something you can do from, like from your gut shot. And you can extract good returns from it, but you need to know what you're doing. Yeah.
Sounds like an option for me.
The option.
Sounds like an option for me. I was just trying to make a pun.
Yeah, well, not just for you, right? And most people are involved in a more simplistic way, right? They buy and hope, and have like the quant shops, which are more interested in doing market making on the platforms, and the hedge funds. They are, like, the knowledge is there to extract this value from these markets, right? It's not that, I know it and it's a secret and I want to keep it for myself, right? Like I have no problem in sharing this because it's no secret. People are aware about this, but as I told you, the market, 500-600 billion size, is too small, for the big guys to operate into this. The guys who do it in equity, bonds, and commodities, the hedge funds, the BlackRock, for them it's a drop in an ocean, this market, so they don't do it. It's not worth it. And so it's up for grabs for niche players, for smaller places.
But so to me it means that it's our time to shine, because like as you said, like the bonds market, for instance, it's out of scale for the individual. It seems that crypto, since it's still relatively new and small, is kind of at the almost perfect scale for an individual.
Sure. I mean, like we don't have to go back too much. Maybe 18, 17, right? 4 or 5 years ago. FTX founder, right?
Sam Bankman-Fried,
he started doing arbitrage between one platform and another. of course, he's a very skilled person, right? He came from a good university with technical background and so on and so forth. But what did he do? He screened diverse marketplaces, and he bought where the price was higher. And sorry,
yeah, the other way around.
Yeah, and he didn't arbitrage, right?
Mm-hmm.
Yeah.
In 2017-18, right, where in the traditional market foreign exchange, but
You wouldn't have it.
these opportunities have gone since the 60s, 70s, yeah, like long gone, right? And so he made money with this extremely simple strategy, yeah. Now, this strategy probably is not working anymore. I haven't looked into it, so maybe it does still work. You know, maybe you find some niche South Korean exchange providers and some Argentinian.
Not mentioning any names, but we all know who we're talking about.
No, but it does, because I know people who work for big institutions in the space, and they do say there are still price inefficiencies.
Yeah.
Because they say, for example, when we do a price in Europe, Bitcoin Euro, right? It's better than what you get at FTX in Bitcoin Euro, because FTX has not a euro dollar, right, for an exchange with a certain bank, right? So these are these stupid, they are like stupid reasons for this, right?
Yeah.
Inefficiencies. Yeah. Now, I don't think like this is the way you should like try to make money in this space, but that's to symbolize that 4 to 5 years ago, strategies risk-free, like arbitrage, like Sam did, worked. Now, maybe these don't work anymore, but if you go one iteration further, they do still work, right? And to go from zero, right, 2017, to what we have in the traditional asset, there will be some time, right? So you have green pastures for probably 10 or 15 years. Yeah.
Wow.
Yeah.
The future looks so bright with you talking about it. It's awesome. But that's kind of the perfect transition then. So you went from traditional to full-time crypto, and you've built that platform, Coinfolio. Can you talk about it?
Yes. So thanks for giving me the chance to speak about it also. I'm a passionate investor, not crypto only. I like investing in many things. I do have mainly stocks because I'm a young person. And so I have a long time horizon. Yeah. The longer time horizon you have, the more risk you should take. That's what like financial academia says. And it does make sense to me. So I also approve it. Yeah. And I do love passive investing, right? So I don't buy and sell. I actually never sold anything in my life. Yeah. So I buy, then I keep it. Yeah. And I don't play around stuff. And I try to
You're
find...
just like a dragon, you hoard.
Like Warren Buffett style.
Yeah, that's what we learned also from the old guys like Warren Buffett, like Charlie Munger, right? Like Costolani. Mm-hmm. Buy stocks, forget them, get rich. You know? Yeah. What most people don't have is patience. Yeah. So they want to be rich very quickly, and that's the best recipe to become poor.
Well moon. Yeah.
There is, I mean, you can do illegal things if you want to get rich quickly, but that has a very high risk premium, right? Yeah. So you can go to jail, you know, and so I decided not to go that route.
Okay.
And okay, so I love investing.
I would never guess that.
I love investing and I love passive investing. And I've constructed portfolios for myself, for my friends, families, where they have like passive investment mandates, right, where they put in their savings or wealth, and they can basically go on and do their lives, because my parents, they have nothing to do with financial markets. My friends who are doctors and lawyers, they have no clue. They actually don't even want to look into it, right? So we did their investment schedule. They look once a year, and that's it. Now, I think in the cryptocurrency space, there is one, which we spoke already about. There are big inefficiencies, which you can explore. Then two, there's a lot of people losing money. Like it's a fact, that people who trade cryptocurrencies, even though we went from a zero value to 20,000, taking Bitcoin as a representation, more than 80% of the people have lost money. So how is that possible? Because when things go up, you would expect that people on average make that money, but it's not true, because there are features which are called fear and greed, right? Which are like the behavioral finance cornerstones, that basically lead you to trade badly. Trading in the financial market is not human, like it's against our nature, right? We are done to trade.
It's I've come across that many times. Like the best traders, or if you want to go like full TA, is the first step is to get rid of your emotions. It's like emotionless trading is kind of like the standard, because otherwise you get fucked, because you're like, oh, I like that coin, when moon, and then you see green bars, and you're like, oh, but it goes higher, and then you see like a big red candle, and you're like, oh no.
Absolutely. But it's not what, like people watching movies from Hollywood, it looks very emotional packed, like you would expect a trader to be a guy who's sweating, who's like high-fiving, who's partying, like all the emotions are out, right? But actually good traders are the most boring people on earth, like as you said,
professional killers.
Because they manage to cut out their empathy, right? Their emotions from their brain. So they are not humans anymore, they're machines, right? It's a skill that just very few people have, and actually it's not advisable. You want to enjoy your life and not be like so emotional. So we are putting up a framework with known strategies, right? We are not reinventing the wheel. So since the 70s, 60s, like for now half a century, there has been done a lot of work in how to construct portfolios in a very efficient way, depending on the risk categorization of each individual. So there are people who are 80 years old should take a certain amount of risk. People who are 20 years old can take another amount of risk.
And a different one.
Exactly. Depending on, do you need the money? Don't you need the money, right? So if an 80-year-old person doesn't need the money, they can take also a very high amount of risk, right? So there are different ways to compose investment portfolios, but there is a certain thing which is similar between a low risk and a high risk portfolio, is to compose it in an efficient way, right? So you can compose highly risky, efficient portfolios, or highly not risky, efficient portfolios. So that's it's not like okay, we do a low risk, we do a high risk. No, we want to do at Coinfolio efficient portfolios as a very thing, and then we give the possibility to do a higher risk, lower risk. So we are going to utilize. We're going to come out with more investment possibilities, right? So, but we start with one, of course, because
you have to start somewhere, and you can say like, I'm doing 10 things at once, and then you do none.
Exactly. So we are utilizing the financial engineering, and this sounds like a buzzword, right? But this is the buzzword which allows you to bring efficient portfolios to life. Yeah. We utilize the advantages of the mathematics which we receive to produce these portfolios and give the possibility to investors, to have the best chances of success in the future. And this takes out the emotion, because people who go with us, they have, you need to have a wallet with, let's say, FTX. Have an FTX wallet, you connect it with us, and then at that point, you can go and do your life again, right? You don't need to worry about anything anymore because your portfolio is on autopilot, right? With the strategy which gives you the best efficient outcome on the cryptocurrency market.
So what you just described is because I used to so I had invested in a copy trading platform. And it seems to me that what you're describing is copy trading, but instead of copy trading individuals,
copy investing,
you're copy trading academia research, basically.
So,
or well, maybe it's not like the right word, but it seems like you have those investment strategies or portfolio buildings or blueprints, and then you plug in the risk. Like let's say I'm a super degen, I want like 99% risk, 1% non-risk, and then so maybe I'm wrong, but from what I get, it's like your system is okay. So this person is 90% risk, 10% safe risk, safer, and so from that there is like all that research. This is like efficient portfolio that splits like 90-10. You should do kind of this. Am I getting it correctly or not?
Yeah, perfect. So exactly, Selim, you got it you nailed it. So there are these platforms, as you said, where there's social trading. You plug into an existing trader, and you follow his trades. Okay. Now, in order to do so, you are exposed to the trader's karma, right? Well, it's a black box. You don't know, right? Like, is he divorcing with his wife? Had he had luck? Or what's happening in his process, right? So the people who do follow traders, they look at their past equity performance, they see it going up, and then they say, okay, it went up, so let's hope it continues going up, right? What these platforms do, they have like maybe 500 traders, and they rank.
Exactly.
They do like
after the days.
Number 1, 2, 3, 4, 5. But people never look who is at place 499, and so they rank, and they continuously rank, right? The best performer of the last 6 months. So clients have the impression that they are always making money, because out of the pool of 500 people, there are always 20, 30 who are doing a lot of money in the last X months. This is a very unsustainable way to do a business, because clients follow traders, then they fall out of luck, the traders, and then clients lose money again, right? So that client is already aware, okay, I'm losing money by trading, so I need help. I give it to a trader with expertise, but he's getting a little bit deceived by the platform, in my view. It's a bit unfair, I think, right? Always showing the best performers in order to entice volume. I don't think it's a very nice way to do business. And this is not the passive investing ethos that we have. Yeah. So what you are, let's take it to the traditional world. In the traditional world, there is ETFs, exchange traded funds, which have been gathering a lot of momentum. People are buying into ETFs, which are passive solutions. Instead of going to their local bank and giving their savings to a portfolio manager, right?
Mm-hmm.
The portfolio manager asks for 2% in fees, is very expensive, and he underperforms the market. What we are coming out is a passive solution, right? So there is no trader behind this.
Yeah.
There is an automatic process based on academia, right? So it's an academic algorithmic process which is transparent. It's not a black box, right? It's Monday you buy, Tuesday you sell, right? It's efficient portfolio theory. We disclose how we do it. People who like this approach can plug in and they don't have to care about anything anymore.
That sounds like Ray Dalio's all seasons portfolio. Is that what he called? The all season portfolio?
All weather portfolio.
Yeah, all weather, not all season.
Yeah. Yes, Ray Dalio is the, I think, most prominent hedge fund manager in the world. Certainly the biggest one. He is using these academic principles to construct his all-weather portfolio, of course. Yeah. So he is trying to not maximize return, but minimize risk, right?
Risk.
Yeah. So he is using academic cornerstones, which we will be using as well, and you are using, to construct these portfolios. Yeah. So yeah, absolutely. Yeah. That's how you should do these things, right? So not knowing the future, right? It's a little bit like game theory. You don't know the future, but you want to be prepared as good as possible for all the possible outcomes of the future, right? And not knowing how the future is, you need to play your hand in a way that prepares you the best for the whole outcome.
Yeah. Don't predict, prepare.
Prepare, exactly.
Yeah. So yeah, like Coinfolio is basically pocket Ray Dalio. It's a pocket Ray Dalio.
Yeah.
Or Ray Dalio in your pocket.
Kind of, right? So we are starting with one index, which is a Bitcoin and gold index. So this means people who subscribe into it, or we're not open yet. So it's going to open, I hope, by the end of the month. We're working on the technical things. But what does it mean, right? The first index is not just a showcase index. We are taking gold and Bitcoin because of the fascinating correlation between these two assets. So these assets have had, in the past, we don't know the future, a zero correlation, right? So this means like they move in a not synchronized way, yeah? When the one goes up, the other one does whatever, up, down, or lower, completely uncorrelated. And by doing so and rebalancing the portfolio constantly, we can take the volatility of the index down to a very low level. Yeah, so the volatility, Bitcoin has a volatility of 80-90%, right? This means that in every given year, it can move 80% with a very high possibility, right? The possibility is 66% in this case. We are including gold into the investment in order to give to people who cannot and don't want to have such a high volatility in their savings, a lower profile, yeah? So you do participate to the Bitcoin upside, but you don't experience these brutal movements. Now,
That's so clever.
Like the reason, we start with this because people can understand this. We have to slowly approach the market. More academic things are going to come, but we develop one thing after the other. And also there is research which is showing that most people, a lot of people want to participate to the cryptocurrency market, but they have not because it's too unsecure, risky. Now, the too risky means for some a certain thing, for others another thing. But for most things, it means that it's moving too much.
Yeah,
it's down. So we want to help these people to get the comfort. We take the risk to a comfortable level by including gold, having a constant rebalancing, but that's all our problem, right?
Yeah.
And giving you the most efficient portfolio in that combination, which is possible. Yeah.
Okay.
And that's the first one, right? Others will follow then, of course.
Yeah.
Mm-hmm. And so far, we are the only one doing it. I mean, like, we will be doing it because we are not live yet, but I haven't come across anyone. I saw what you said. So there is social trading. There is bots trading. Bots, which you say like moving average crossovers, stuff like that, right? And yeah, that's pretty much it. But most people who have cryptocurrencies are completely left to themselves. Trade it and whatever, right? They have no help whatsoever, right? Like when you do stocks and bonds trading, most people go to their banks.
Yeah.
Get some help, right? Like in the sense of, when my aunt, who is like 72, she's not choosing the stocks by herself, right? Like somebody is telling her a little bit what, where.
There's financial advisors.
Yeah, exactly. I mean, they're very expensive, but still, right? I mean, when somebody has zero idea, and most people in cryptocurrencies, they're just like, they're freestyling it, and they don't.
That's a good way to describe the freestyle. Yeah.
They don't have the background and educational. Sorry, I don't want to be talking as if I had all the infos, but most people, when you are like 21 and you never traded and you have very little idea about macroeconomics, you can have a view that cryptocurrencies will succeed. This is fine to have, right? That's a long-term view, and you might be right. But if you then open an account and do 3-time leverage on that position, you will not succeed, because even if you're right in the end, right, you will be knocked out before.
Yeah, definitely.
So it takes a little bit of experience and education in order to have a sound investment setup.
Yeah. I have one question that particularly interests. I have 3 actually questions that are particularly interesting. But the first one is, can you tell about the misconceptions about your job? Like, what is it of being like a...
Is it money laundering? Is it?
Yeah. Like, what is it that misconceptions in the sense, like, what is it to run a full-time crypto business or be a founder of a crypto thing?
Platform.
Well, I mean, I come from the traditional world, right, of finance, and there the acceptance is very little. So you receive a lot of pushback. In that world, most people are still.
Can you pinpoint why, or what do they think?
Yeah.
That?
They think it has a price but no value. most cryptocurrencies. So like a tulip mania, right?
Yeah. Okay.
Time until it's going to deflate. Yeah. So it will go down to zero at some point, right? That's what most people think. And so the acceptance for that is very little, which I'm okay with it. You know, like if you want to have a different outcome than the average in your life, you need to do something different than the average.
Yeah.
Right. So I'm fine in taking an educated, different than the average route for my life. Yeah, and maybe it's a wrong one, but I'm okay with the risk and reward dynamics of this. Yeah.
Okay.
So yeah, I received pushback from the traditional industry that it's something which has no value.
All right.
Yeah.
Now, because we're nearing it, so I'm a bit rushing. What excites you for the future of crypto? I'm guessing is like turning or like witnessing the change from inefficient markets to super efficient markets, but that's me putting words in your mouth. So I don't know.
Yeah.
What excites you for the future?
Yeah, so we can tokenize everything. Yeah. And this can unlock a lot of friction into the economy. So the information transaction, right, which price is an information, piece of information, is very slow at the moment, right? We have certain price tags for certain things, but many others we don't. And it would be valuable, I think, if we can tokenize more products, right? More things, more ideas maybe as well, in order to create a faster and a more efficient osmosis in, you know, like in our interactions with each other. Yeah. So I think it increases the osmosis. Yeah, if that maybe brings to the point. Yeah.
Awesome. I never thought you were going to say that. It's good, really good. Channing, do you have a question before I keep firing?
Yeah, sure. Just one question. About your portfolio, you just said that Bitcoin and gold. Is there any other things are in the portfolio? Like Ethereum, silver.
The institution.
Yeah, so we have this as the first one going live now, and we will push out another two probably by the end of the year. And so it will look like this probably by the end of the year, that there will be three pillars of academia-based portfolios, efficient portfolios. And they will be different, right, in style and different in risk. And at some point, we will create a mother portfolio which tries to go through horizontally in all vertical silos. And then, you know, like it will be different again, but there will be more choices by the end of the year than just Bitcoin and gold. Yes.
Yeah. And then that leads to my second question. Sorry. What is your reason of picking one thing then? I mean, in the stock market, it's fairly reasonable that you find the intrinsic value, you find the earnings, you divide the price of the shares, and then you find the value of, okay, this is undervalued, this is overpriced, and then you don't buy it. So that's how you construct your portfolio. But how do you construct your portfolio in crypto? Because apparently they don't have their real values.
Yeah.
Bitcoin even.
Yeah.
So what's
that's a very good question. So it would take like 3 or 4 hours to really unpack. But I try to go to the point. So stocks and bonds have future cash flows. Yeah. So today, and these are the next years, and you will get here money, here money, here money, here money. Yeah, you take all these cash flows, you discount them back to today, and that's the price of these future cash flows today. Yeah, stocks and bonds. You can't do this for currencies. You can't do it for gold. You can't do it for cryptocurrencies, right? So they are a completely different kind of asset. Yeah, and they are not an asset as stock and bonds can be seen, but they are more a store of value, right? Which the trust gives it. Yeah. So people believing in it gives it the value, right? The dollar has a certain value because it's backed by the Federal Reserve, because these are backed by the tax returns of the US people. Yeah. Gold is 3, 4, 5,000 year old and has its value. The fascinating thing that Bitcoin has its value through the decentralized nature of it, you know? So doing a valuation of Bitcoin and the valuation of Ethereum is a very different process, right? Because Ethereum can give you some kind of use. Bitcoin, right? So we can't go in with the classic metrics which we have from corporate finance of valuation from stocks into the valuation in cryptocurrencies. You can't do that. Yeah. It actually does put a big question mark, right? If the valuations we are utilizing, you know, long-term metrics which look at the realized value over Bitcoin over a certain period of time, right? But these are metrics which are a little bit astrological, right? They might not be correct to be using, right? The V ratio, right? Maybe it's good, maybe it's not good, right? Like the valuation of Bitcoin is an impossible task, I think.
Ooh.
Yeah, I mean, it's an impossible task. It's I don't.
Is it an impossible task because it's because, as you said, there is like it's how to frame it. It's an impossible task because of it's either a brand new asset class that's like really like out of the blue, or like because what we do, like I guess it's more like guessing, but my intuition tells me that the way you evaluate things is always relative or with past experience informing that. Like gold, it's like ages, so we know it's precious, for instance. Stocks and bonds, it's been around longer, that you can even trace back like paper money to the 16th century, so you know it also has like a history of valuation in a sense.
Yeah,
Bitcoin doesn't. So is it for that reason that it's so hard or impossible to value it?
I mean, like take gold, take a Rolex, right? Take a Rolex, you know, the prices of a Rolex went from 5,000 to 20, and now they're coming back to 15, yeah, more or less. Now, what is the value of a Rolex, right? Now, if you talk about like the intrinsic value, about like the steel, right? Okay, well, I mean, that's like $2,000 maximum.
Yeah.
So it's a value which is attributed by the people who are willing to pay for it. Yeah. Okay, so the brand has the value, right?
Yeah.
Now, Bitcoin has no intrinsic value, right? It's you know, you can copy it and do a second Bitcoin tomorrow, right? So it has no value. And also gold has no value. It's a stone, right? It's a metallic stone.
Yeah.
Useless, basically, right? Besides some catalyzers and stuff like that.
Yeah, exactly.
And since it doesn't pay you any revenue streams for the future, right? You have to value it like jewelry, right? Like how much people put trust into the system, right? And that's the most fascinating thing about Bitcoin, especially Bitcoin, right? Which is completely useless, right? From the point of view, you know, like Ethereum can give you something, right? But Bitcoin is completely useless and it's still so dominant, right?
Yeah.
So this means the decentralized nature of Bitcoin is what it gives it the value, right? That nobody needs to, everybody trusts it, nobody needs to trust it, right? Like it's something totally unique, right?
Yeah.
So this unique thought puts a value into it. Now go and figure out what that means in dollars is super.
Okay.
It's
so it's the dollar valuation that is almost impossible.
Yeah, exactly.
Okay.
Valuation is impossible. Yeah. It's difficult to say it's overpriced, it's underpriced, like people come out with these rainbow charts with the logarithmic things and stuff, and the halving periods. People try to come up with stuff, right, which does try to give it a valuation range in dollars, and maybe that's the best thing we can go with it, right?
Yeah.
But you cannot do a valuation like in the traditional corporate finance world, where say in future I receive 100. What is the value of the 100 today? Yeah, you can't. Yeah.
Gotcha. And I have a question that I'm starting to ask all the guests is, what was really kind of formatting, or like, for instance, the way Tech3 is born is out of a shitcoin that got rocked, basically. And so it's what we call our hard-earned lesson, and something like, you're in crypto, so now the question is like, what hard-earned lesson do you have, or what mistakes you made in the past in the crypto that you would not do or you don't want others to do?
Right.
Because we've all made some. So
yeah, no, that's a good question. Like I read my first books in 17, Age of Cryptocurrency, I think it was. And then Ethereum in 2017. And then I started also buying a little bit of those. And I have to say, I tend to I try a lot in my life, and I tend to like things which are maybe a bit premature, right? Or they're not always premature. Sometimes they never come, right? But I like to look where others are not looking, right?
Yeah, be at the frontier or forefront of it.
Exactly, right? And in the stock market, I loved Tesla, for example, like since 16th, and then Bitcoins. And typically I receive a lot of pushback. And sometimes I do give in, right? And what I want to say is for myself and my younger self and other people is think with your own head and try to I don't want to say ignore, because it's always also valuable to hear what the surroundings are telling you, right? But think with your head and make your own conclusions, right? Even if you don't need to have 150 IQ in order to figure out things, right?
Yeah.
You have to be passionate and spend time into it, and then you can also go against the mainstream. So I sometimes I gave in the recent years. I stayed far too long in my traditional career because I am slave to the social situations.
Peer pressure.
Yeah, salary, a good job. When I go home, say like, yeah, I'm vice president, whatever, from a fucking bank, right? It sounds good, like. People do like that. Now, what do? Yeah, I have a startup and it's going so, like I obviously make less money than before, right? Like I have no salary, right? So, but I have to say, you want to go at the end with no regrets and give the best. So think with your own hand and, stick to your ideas. Yeah. Yeah.
Wow. That's like perfect conclusion.
Have some conviction.
Yeah. Yeah, but we are all we're all convicted because otherwise we would have capitulated already. But we didn't. So
Yeah.
well, thank you very much, Vittorio. It was a pleasure, and I hope that you people watching the stream, you have his credentials or email if you want. Go check out Coinfolio. Like, it's not out yet, but it's going to be soon. Do you have a date, by the way?
Yeah.
Or not?
It's moving. Yeah.
Oh, okay.
Yeah, like we have the possibility to subscribe to the newsletter. Then you will receive immediately the push out. I assume it's going to be the end of this month, but like
no promise there.
Keep an eye on it. So once it's out, we can start checking the mail. Yeah. Keep an eye on him and check his accounts.